Hey traders, Raghee here. Good to see you all. Welcome to our Wednesday episode of Charts and Coffee. All right, good to see everybody. Let me turn down some volume elsewhere. All right, good to see everyone. Hope everyone's doing well. Again, happy Wednesday. Welcome to Charts and Coffee. Got my Jocko mug today. Get after it, right? Looking forward to seeing what today's going to bring in terms of the way in which the market's going to be responding to the volatility. I think I was mentioning this in either the free video or the premium video yesterday that, you know, the way Indiana Jones hated snakes, that's how I hate politics, especially when it permeates the trading mindset that we have. Because like I said, back in 2016 or 17, there was a great interview with the great Stan Druckenmiller, the GOAT of traders, greatest of all time. And he said, look, he had a lot of peers, colleagues. These are people managing billions of dollars in the market, and a lot of them let the psychology of the politics permeate what they thought the markets were going to do rather than trading what they were seeing, trading what the macroeconomic forces were indicating was about to happen. And it's about to happen again, by the way. Mo money, mo money, mo money. Mo kittens, mo money. That is what's about to happen, gang. Janet Yellen, confirmation hearing was yesterday. The market was a little wobbly about it. Some of you might have seen that because there was discussion about what the corporate tax rate may be. The stonk market kind of threw a little bit of a tantrum for a moment. And then, like a little light bulb appeared above their head. They remembered that she was head of the most glacially paced set of rate hikes in the history of Fed Reserve chairs. Unless we have something really, really rocking the foundation of where we are right now macroeconomically, expect weaker dollar, expect stronger equities. Reflation trade is still on track. All right, so with that said, where are the charts? All right, let's see here. Charts. There we go. Nobody needs to look at my mug. All right, let's get to it. So let's take a look at some of the questions here. Good morning. Yes, happy Wednesday, everybody. We have folks tuning in from all over the world, so I never know. It could be good morning somewhere. I was just on, oh my gosh, Skype with someone in Japan. I remember, oh my gosh, it's 11 o'clock there. So yeah, always remember we got folks from all over the world, and thank you for tuning in for Charts and Coffee. All right, even if it's after dinner coffee. So first question is, and thank you for the audio and video check. I appreciate that. Pablo, hey there, how you doing? Pablo says, Cathie Woods bought $220 million of CRM. Is CRM a buy? It's very difficult not to respect. It's very difficult to ignore what ARK and Cathie Wood mean to the market. CRM was never a short for me personally, even though you can see, Rog, it's double red. In it, now remember, gang, index, sector, stock, not stock, index, sector, stock. That is at the heart of what we do at the Sector Secrets Mastery. And by the way, for those of you that are in the mastery, I know there's a bunch of you in the room that are, and for those of you that aren't, one of the things that I'm going to be doing, and I'll be completing it today, is I'm going to be breaking down thus far what our alerts in the sector secret mastery. And this is my 2020. I'm going to be updating this for 2021. And we're going to be talking about it based on the same thing that we've always discussed, which is not, it's really more about, is this friendly for folks on a budget? And speaking of the budget, the average budget, and if you don't know what that is, you really need to join me over at Sector Secrets, because if you don't have a budget, you're not able to asset allocate in a way that's A, consistent, and B, probably much more importantly, that is respecting risk. So the budget is $2,400. And by the way, what does that mean? This is not highfalutin financial talk. You don't need to be a PhD in economics to understand that you need a typical amount of capital, actual real dollars, not margin dollars, not funny money, monopoly money. What are the actual dollars you need to put on a typical trade in an account to achieve that? My typical budget on the low end was $1,100. On the upper end was about $3,000. And on average was $2,400. Think about your budget. Again, if you don't know what that is and you're not incorporating it, come check out what we're doing. So the idea about CRM, let me go back to those trading view charts. So the idea about CRM is this. If the overall index is moving higher and the overall sector that CRM is in is also moving higher, and CRM is in sector ETFs, CRM is in the broader average. If those are heading higher, I'm not going to presume that even a boat with a broken bilge pump like CRM is going to necessarily move lower. I'm going to presume that it might struggle to move higher with the rest of the boats in this rising tide, and but I don't want to short it. I'm not going to necessarily prioritize it for a buy, but I'm not going to short it. Now, in this year, because I think it's very interesting what Kathy Wood and company are doing over at ARK, this year we're going to talk a lot more about the influence of actively traded ETFs like the ARKs. And if you don't know what those are, you really need to familiarize yourself with them, because they're going to be a big part of sort of this active trading watch list that we're going to utilize, because if that's the flow of capital, CRM is a good example. So Pablo, I would have loved for CRM to be moving higher. It sure isn't a short. It's probably a very wonky oversold buy. I think the one thing that I would say here, let me double check for you. I think the one thing that I would say CRM has going for it is I thought the 200 propulsion dot was active here. I did believe it was. I think it is. Yeah, let me do this real quick. There it is. That's the 200 EMA. And that is a psychologically, technically important level. So I think as long as it's gravitating around that level, that we're not wandering too far below it, it's probably an oversold buy, but I would not prioritize it. But again, ARK interest in a stock, that's a tough thing to bet against. So next up is Kamal. Hey there, Kamal. Good to see you. Good morning, Raghee. You are always such a... I'm really not, Kamal. I'm fiery. I'm working on happy. Maybe it's the coffee in the morning. Yeah, I can be as salty as anybody, but I do enjoy what I do. Thank you. I appreciate that. Netflix. Glenn, Netflix. All right. So it's probably a very similar answer to Pablo's CRM, sans the ARK influence, the ARK narrative. And that is, we're above. So there's a few things we can take note here to say, well, Rag, it's a yellow, it's a wonky, it's a lumpy market. Don't forget about the XLC. We could have the QQQ down here or something else. But I'm looking at this row. And yeah, it's kind of wonky. If anything, look, we even got some red grab candles. But there's a few things that are important. It's above that 200. I think that is, from a sentiment perspective, influencing me to be a little bit more bullish. What else is going to influence me to be a little bullish? The overall trend, as ugly as it has been, I mean, This thing has been riding like this tired little mule higher, but we've spent a lot of time in the green or yellow, which means it's still bullish for the most part. So, we're going to open up. Where is Netflix trading? It just topped out at 576. It's trading at 572.65 right now, where this orange, there we go, where this orange thing is up there. So, yeah, huge move to the upside. I guess the real thing I would ask anybody is think about these things, because these are repeatable processes. These are kind of processes repeating, rinse and repeat type process that I do with all my equity in ETF trading. Look at the proximity to support, right? And then look at the distance to just the swing high here, or the recent double high here and here. Where is there more room to run? I'm not saying that we're not capable of smashing 475 and absolutely moving, lower. I'm not saying that's not possible. It certainly could have been a huge down candle for Netflix. But if I've gravitated to one end or the other of a range, and this is definitely a choppy market range, so say the telltale yellow JT trend reading, to me, the higher probability play is the long side. Does that make sense? We're closer to an oversold. So it's less about what do we do with it now? Because clearly, after a market's done something like this, I'd like to personally see just even a slight pullback, and then we're probably going to run for the next few days. Because what's going to happen? Everyone who is either short before earnings is going to get squeezed, and that's going to happen today. They're going to get squeezed, a short squeeze, right? Short squeeze, ouch. And then they're going to flip. A lot of them are going to flip direction, look to play to the long side. And everyone else who are momentum-oriented traders, or as I maybe not so endearingly call them, Momo chasers, the Momo chasers are going to get long, because there's nothing a Momo chaser likes than a flashy up, huge green gap candle, right? Love it. They can't help it. Can't help themselves. So I think we're going to see a little bit more upside to Netflix. I'd like a small pullback. That's just me. Okay. Next up, good morning. Good morning. Chad, good morning. PDD was Yahtzee on Friday. Hope you grabbed some of it. Double green. You're the one that asked me about PDD, right? So I hope you did, my friend. Good eye. Nice pull. So Chad, thank you, because Chad, this is classic bread and butter. You can do this for the rest of your career. Gang, I developed the 34 EMA wave. I did not invent exponential moving averages, but I'll tell you what, before I started doing this, and this would have been in the mid 90s and really even earlier, but I say mid 90s because then we had the internet. I started sharing this on a site. Some of you who have been with us, been with the markets for a long time at sort of the early part of the internet and financial media, might remember sites like Trading Markets. There's a lot of very early websites about the markets, and I started sharing my charts, and I had a regular spot in the rotation of folks who would write up analysis. And I started sharing the 34 EMA waves. Some of you may remember, I don't know how many of you do, they were all magenta lines back then. They were all just magenta lines. And I would use a 34 EMA on the high, the close, and the low. And so I bring that up because this is multi-decade, multi-market, multi-time frame tested. This just has a high probability of working. Does it work all the time? Nothing does. But good eye, that's exactly what we want to do. Find a market whose path of least resistance is to the upside. I think the more difficult part for a lot of traders is the watch list building, gang, the watch list building. So if you get the watch list right, the process really isn't that difficult. Okay. Chris asks, how do I use the VWAP? Oh, the volume weighted average price in my trading. So Chris, there are just a handful of elements I like to keep in mind. Of course, price, right? But I think a lot of people begin and end with price. Indicators are mostly price. Charts, of course, are price. Moving averages, price. I want to add to price volume. I think that's really important. People say price is the most important. I think it's price and volume, right? You can end there. I think you'd be perfectly fine and far ahead of the masses just with price plus volume. By the way, VWAP is that volume tool for me. And this is how I use it, and this is what it's telling me. How much volume is occurring at a particular price level. Not histograms telling me what time or day we saw volume, but what price level. It's the difference between volume down in here and volume over here. That's the difference. What price level do we see volume? By the way, the other two, time, right? Time, or date, and volatility. And those are the four elements that I measure price with, measure the markets with. Most people are here, and that's fine, I suppose. Incomplete, though. You add this, you're in great shape. You add this and this, now you're looking at the market in a 4D way, and you're seeing things that other people simply won't because they don't understand the context of all four: price, volume, time, and volatility. So I use it to understand the importance of certain price levels over others. That's really what it's for. So thank you for the question. Any thoughts on PLTR? I was looking at PLTR. Yeah, I am looking at PLTR. Any thoughts on it? Yeah, I do, generally speaking, like it. Let's pull that up. I do, generally speaking, like it. It's gone a little yellow. It's been a little yellow for a while. So really what that tells me is I still want to be a buyer. Okay, I probably want to be a buyer a little bit more conservatively. And I'm not going to have a high expectation for this market necessarily breaking through recent highs. Whichever one of these ultimately as resistance holds, I'm going to be a little bit more of the opinion that we might stay stuck between these Darvis levels, which is fine. That still gives PLTR plenty of potential upside. And if at some point within the movement higher, this goes double green again, green, well, then we can start looking at whether we can see new highs, right? And PLTR. And that might develop. We'll see. That might develop. But right now, I would treat this as a market that's clearly bullish, but I would look for lower ends of the range to get long from. So thanks, Ryan. Appreciate that. Next up is, do I trade bonds or TLT? Fuzzy logic, I do. But much like gold, the ZB futures, which I would oftentimes then just go trade with TLT. I like the 10 and I like the 30-year bond. I'm a big fan of both in terms of trading them. But right now, the structure really doesn't give me an edge. I am looking for bond yields to move higher again. I am looking for them to move higher again. I don't have that trade on. I don't want to short them necessarily, but I am looking for bond yields to move higher again. But do I trade them? Yes. I just don't want to short them. They don't match up the narrative that I have. And quite frankly, even though this has gone red and it's been testing double red quite a bit, you see this low back in here. That's actually a Darvis level. It's automatically drawn in the chart. I think there are opportunities possibly to, although, hey, all my cards on the table. I thought we might have bounced from this area, right? That area right there. And we didn't. So, I want to be straight up with y'all. I don't want to short this market though. I do not want to short bonds. So a downward trending bond market, for those of you that are not acquainted with how the ZB moves, or the TLT ETF, the thing to remember is when this is moving lower, that means yields are actually moving higher. I don't believe yields are going to continue to move higher. I'm actually quite of the opinion that real yields will continue to move lower. In other words, this chart right here, let's bring this up. This chart right here, yeah, will continue to move lower. I'm actually looking for that. There's your 10. This is your 5, 10, and 30 yield. And I'm going to actually scroll in a little bit here. Okay. Do you see how these are on the far right edge? The far right edge, right in here. Right? Do you see how these are sort of like this? Right? Flip that around and you've got gold. All right. Just heads up. Flip that around and you've got gold. All right. So let's see what else we have here. Oh gosh, 20 minutes sure does fly by. I'm going to be heading over into the Sector Sequence Mastery room and the Futures room here in just a moment. Please treat today. I don't know if it's going to be a caution day or not. You know, a lot of folks are concerned. Yellen's confirmation Senate hearing was probably a little bit more of a potential caution day than today's inauguration is going to be. But I think a lot of traders and investors are sort of waiting with bated breath just to get through this day in terms of who knows, gang, what kind of shenanigans might ensue. It should be fine. But I think a lot of traders are considering today may be a caution day, so it probably would behoove us to treat it as such. I think we're going to see a rising tide. Netflix is likely going to be part of that, is my opinion. Okay. All right, gang. So let me sign off. I'm going to go get to my day job. So thank you very much for all the questions. I know by the way, gang, I know I miss a lot of them every day, and I really appreciate all of you making your way out. I hope that these conversations are helpful and sort of prime you for the day. As always, thank you for your time. Thanks for being part of our Charts and Coffee crew. All right, let's get after it, gang. I'll see you tomorrow, 9 a.m.